We now turn to Alexandre Tombini from the Banco Brazil.
Thank you. Good morning, everyone. I would like to thank the UK government for inviting me here today to address this very distinguished audience and having the opportunity to share some views from Brazil. I think Agustin had made my life much easier here today because I think I could sign most of his comments regarding how we emerging markets have prepared ourselves, have learned from our past experience in the 90s and early 2000s to make sure that we put in place a robust policy framework, but also built up some important buffers which are now making the difference in this very challenging global environment. I think it's fair to say that the global economy, it's very challenging for a country like Brazil today. I also endorse the view that it's a long shot to invoke the idea of decoupling at this point, but certainly one thing that is different as we speak now is that the emerging market economies, most of them, have the capacity to sort of adopt counter-cyclical policies, retaining fiscal responsibility, but we are much better prepared today to implement those kinds of policies and securing financial stability, macro stability, and trying to, on our own forces, revive economic growth. I think the other different thing that I could highlight now is that this linkage between financial distress and sovereign debt issues and crises, it's now not an issue just for the emerging markets as we had in the past, or maybe also Japan that has to deal with this kind of issue for many years, but now most advanced economies are having to deal with this very unpleasant linkage between financial distress and sovereign debt issues. So I think going back to the case of Brazil, just to then at the end talk a little bit about a couple of major challenges today for the central bank and for the country. I should say that my country today is going through a very typical business cycle, typical in the sense that it's unusual in Brazil that we have the kind of dynamics, economic dynamics we're having today. Brazil has grown very fastly in 2010, 7.5%, much above our potential output growth. So we had to engineer a slowdown that was necessary. There was some deleveraging to take place and also to slow down the very hot growth of aggregate demand in our country. So we put together a very substantial and consistent macro tightening, including fiscal, but also monetary and credit policies. And this has produced a slowdown, but then it coincided with the aggravation of the global environment in the second half of last year. So we had swiftly to change course in our policy strategy to make sure that we did not overdo the tightening that was required in the beginning of the year. So right now, Brazil is recovering. The recovery is slower than we will think in normal times. So it's a typical business cycle with a twist, and the twist is this global environment. In terms of the spillovers of the global economy to a country like Brazil, I think it's fair to have multiple channels: trade, capital flows. We have credit markets. We also have confidence. And I think it's fair to say that the impact in most of these multiple channels has been moderate, with the exception of the confidence channel. In terms of trade, exports, Brazilian exports are growing at a 10% rate, much lower than previous 2 years, but still growing. When you look at the external financing, it has remained quite resilient, around $70 billion in terms of overall external lines to Brazil, and around $35 billion. The trade financing in Brazil has remained quite stable over this last 12 months, I should say. So it's not the trade channel that is doing the most impact on the Brazilian economy. and not the financing channel. But the confidence channel is an important one. I think the bombardment with bad news every day, people talk about the CNN channel or the Bloomberg channel or whatever. So it makes this global crisis more global than ever. And I mean, people wake up in the morning and see the news. And so this has affected the spirits, of course, the business people, the consumers. And we have to revamp investment. We have to revamp the confidence area in a country like Brazil. But we have done a lot in terms of the policy reversal. I think demand is still growing strong in Brazil. If you look at real wages are growing at the rate of 3% in 12 months. Employment, Brazil is still able to generate 1.2 million jobs in the last 12 months. We were generating 2 million, now we're generating 1.2, but it still is enough to keep our unemployment rate at record lows. So combining a very dynamic, still very dynamic labor market with a real wage increase, we have a total real wage bill that grows to the order of 5%. So this is an important support for demand going forward. You have also credit, which is more moderate, but it's still growing. And the Brazilian real has weakened quite substantially in the last 6 months or so, and this has made so the negative contribution of net export that has been a norm in Brazil has been reduced. So more of this demand going forward should be attended by domestic supply in the case of Brazil. So we are poised to growth around 4% in annualized terms in the second half of this year. Okay? I think in terms of the challenges for a country like Brazil, I think it's a fair view to think that in a few years in the future, we will have the countries that are now affected by this global financial crisis will be much more competitive than they were when they entered the whole financial crisis. So capital costs will be very low, labor costs will be low. I mean, the reforms, even if they come late and they are less than they should be to restore confidence in the short run, they will come through the system. And a country like Brazil and other emerging markets will have to face tougher competition. I mean, see the case of UK Prime Minister just alluded to many examples of regained competitiveness in this country. And it's going to be perhaps the same with other areas of the Euroland. So 2 years down the road, we have to face much stronger competition than we did prior to the crisis. So we have to prepare for that. A sound macroeconomic framework, it's good. I mean, financial stability is good, but then looking at the broad economy, we have to address competitiveness issues. And in this respect, my country is now focusing on more horizontal policies to reduce within a reasonable envelope, to reduce the tax burden, the overall tax burden for the real economy, to intensify the public concessions, which is a way to get together the necessary financing for all this demand we have in Brazil for rebuilding infrastructure, especially infrastructure related to transportation. And so we also have to address a major issue in Brazil, which is the cost of energy. So and the government now is focused to design policies to considerably reduce the cost of energy going forward. So I think the message that I want to deliver this morning is that, yes, it's a very tough global environment in the short run. We emerging markets are capable of implementing counter-cyclical policies because we did the homework, we prepared ourselves, we had to deal with crises in the past. But this tough environment can get tougher from a different perspective, so we have to be prepared to endure higher competition when this crisis hopefully is behind us in a few years down the road. Thank you very much.